bills, 6-month bills, etc. If you if you make everyone redeem their bills for 100-year bonds, where's the collateral? You could have triggered the greatest liquidity crisis in history and collapsed the entire monetary system. And I don't think Moran knows that. Hopefully he's listening to your broadcast so we can pick up on it. But I'll be talking about it and writing about it some more. But that's the Achilles heel in the Mar-a-Lago Accord, which is if you're going to issue 100-year bonds, because there is a debt ceiling, if you're going to issue all these so-called century bonds and drop the bill market, you're going to collapse the derivatives market. Janet Yellen didn't really understand what we're talking about right now. She's not that good of it. She's kind of a statistics geek. She didn't really understand what we were talking about, but somebody got through to her. And I don't know whether it's the Treasury Borrowing Committee. I don't know, maybe Jamie Dimon picked up the phone. I don't know how the message got through, but the message did get through. And all of a sudden she's issuing, hundreds of billions of dollars of Treasury bills. And it worked. And the market remains liquid. People like Treasury bills for the reasons I mentioned. So if you're just looking at the liability side of your balance sheet, you're like, well, why wouldn't you rather have 100-year debt than 100-day debt? Well, you probably would, except that 100-day debt or a 3-month bill in this example is what keeps the entire global monetary system up and running. And so I don't think they really understand the impact it would have on collateral markets, derivatives markets, and bank balance sheets. Well, it is, it's somewhat inflationary in the sense if you weaken the dollar, then Americans have to pay more for foreign goods. So if you're buying a Swiss watch, French wine, Japanese manufactured goods, vacation, whatever, in a world of weaker dollars, you're going to have to spend more to get those foreign goods and services. That may actually help the trade deficit, because if Americans say, well, I can't afford a European vacation this year because the dollar's cheap, I'll go to, the Grand Canyon or Disney World or something like that. That at the margin, that could help with the trade deficit, which the Trump administration is very focused on. But what it really is, it's not so much that they want to, it also makes U.S. goods less expensive from the foreign point of view. Just as it makes foreign goods more expensive for U.S. consumers, it makes U.S. goods less expensive for foreign buyers. So if you're Europeans or Chinese or Japanese or anybody else, and you need U.S. inputs, I mean, think about a world where we're manufacturing more in the U.S. and foreign trade partners want to buy our stuff, which is what we hope for, and you weaken the dollar, they can afford more stuff. It makes U.S. goods more affordable. And it's also a warning shot to the trading partners. Don't you dare cheapen your currency to offset the tariffs. We're going to cheapen our currency because we want to sell more exports. The trade deficit, of course, has two sides, imports and exports. Well, the tariffs are a way to reduce imports, but the cheapening the currency is a way to increase exports. And the combination will reduce the trade deficit and help GDP. I mean, this is all, it's a very complex, certainly complicated machine with a lot of moving parts. But this would be, cheapening the US dollar would be one of those parts. And it is what, as I said, Nixon and Baker did in the 70s and the 80s. But we're not living in that world. It's a different world. It's more, whatever you think of globalization, the nationalists and, the Trump team, the MAGA team don't want globalization. Okay. But it's here. I mean, you can try to reduce it or back away from it a little bit, but it's here. My book Sold Out was on the supply chain. These supply chains are real. They did break down in beginning of 2018 through 2020. Of course, COVID made it worse. It did contribute to the extreme inflation we saw in 2022. June 2022, inflation was 9.1% annualized. So it has all those impacts. But Moran wants to cheapen the dollar to promote exports, which it does. If you're Indonesia and you're shopping for an aircraft and your choices are Airbus or Boeing and the dollar is weaker, you might buy Boeing. And so obviously that helps our manufacturing jobs in the U.S. and trade, reduces the trade deficit, increases exports, all the things we've been talking about. But you But what Moran's also talking about is threatening our trading partners. Don't you dare try to cheapen your currency. And but he will not have the cooperation that James Baker had. What he wants to do is use coercion, and including the traffic light system I described. So that's the point of it. Yes and no. I think tariffs I'm all for tariffs against the American way, the American system. I think that's a very good move. Scott Bessen's 333 plan makes perfect sense. It's, like I said, simple math, but yeah, you don't have to wipe out the debt. All you have to do is reduce that ratio, debt to GDP ratio, get moving in the right direction. That will be extremely beneficial. And then, the oil production will, basically be if not deflationary, at least disinflationary. It'll fight the inflation we've all been living through. So Bessen's 3 Arrows plan makes perfect sense. Navarro's tariff plan makes perfect sense in my view. Create high-paying jobs. Those are good things. Moran's Mar-a-Lago Accord, I think it has some major problems. The first one being, it's not relying on cooperation, it's relying on coercion, which could have boomerang effects. And I think he completely misses the importance of Treasury bills to the banking, to the Eurodollar system and the derivatives markets. So that's the one that I would be most concerned about. And I don't think, and I talk to some Trump people from time to time, I don't think that analysis that we've just gone through has really sunk in at the White House. Hopefully it will. Sure. The drivers, there are several, which is a good thing if you want gold to go up. I like it. Okay, so the first one is central bank buying. By the way, there's almost no retail interest in the United States. There is in other places, India, China, not in the U.S. I run into people all the time and they say, yeah, Jim, I talked to you a year ago and then you said buy gold. And I said, yeah, did you? And they go, no, because the retail, there is no retail frenzy at all. And there's barely any retail notice. A few people are buying the GLD ETFs in a little bit, but the buying is coming from institutions, in particular central banks. So we know who they are: China, Russia, India. Actually, Vietnam is a big buyer, Mexico, Kazakhstan, Philippines. You look around, and all this data is available. You just go to the World Gold Council website. You have to give me your email address, but it is free, and they have a really good database, so you can find it very easily. And they also break it down. Oh, so Turkey's another one. Iran's non-transparent, but they're buyers. So they're all buying gold as a hedge against inflation, hedge against dollar devaluation, and some of the problems we've been talking about. But the biggest hedge is that the U.S. At the beginning of the war in Ukraine froze approximately $300 billion of Russian-owned Treasury securities. Now, Russia made the money legitimately selling oil. They got paid in dollars. They took the money. They trusted us. They bought Treasury securities, all different maturities, probably a lot of bills, but also, intermediate-term Treasury notes. And they had, trying to get the exact number, probably over 50% of their reserves in U.S. Treasury securities. But they were, because the U.S. dollar denominated, they were held mostly in a custodian in Europe called Euroclear. It's in Brussels. So Euroclear has $40 trillion of assets under custody. It's one of the largest custodians in the world. So we and the Europeans froze those assets, which is easy to do, because the Treasury and the Fed control the ledger. They're all digital. The last paper Treasury security was issued, I think, in 1978 or 79. So maybe someone's got one in their grandmother's attic, but they've been digital for decades. So they were frozen. But we're good at that. We freeze it all the time. The idea that the U.S. doesn't do it, we do it all the time. But what was different is we went a step further with Russia. We didn't just freeze them. We started to seize them, steal them, convert them to our use and NATO. And they were collateral for a $50 billion loan to Ukraine. So think of the irony. Russia makes money selling oil.